Hello, welcome in the next video. This video will be about when should you wait for the confirmation entry and when can you use the risk entry. Okay, let's begin. You should always check if price is coming from an unmitigated zone or not. As I said in the previous video, you want to trade the controlling side of the market. If you are waiting for a demand trade, but price is coming from an unmitigated supply zone, supply is in control, and you can't execute a demand trade without a confirmation because there could be a high chance for you to get stopped out. Okay, let's see an example for when can you use risk entry and when should you wait for confirmation entry. As you can see, price is moving in a downtrend here, creating series of lower lows and lower highs. Supply was in control because supply was formed continuously, but price tapped into a demand zone. And after the demand tap, price broke through the last supply zone and created a change of character to the upside. And as I always say, if price breaks through a zone, an opposite side zone will be automatically created. So price broke through a supply zone, so a demand zone was formed. After the tap of this freshly formed demand zone, price created a break of structure again to the upside with inefficient movement. Okay, after this, if you want to execute a demand trade here and follow the trend, you have three possible scenarios. If price taps into a supply zone, comes up here, reverses, then supply will be in control again, and you can't execute a demand trade without any confirmation because you always want to trade the controlling side of the market. And if supply is in control, you can't open a demand trade because there will be a high chance for you to get stepped out. So in this case, you should always wait for confirmation entry. We will talk about confirmation entries in the next unit. Okay, the second scenario, if price reverses before this supply zone and does not tap into any supply zone, then you can open a risk entry here without any confirmation because demand is still in control and you can easily target the next unmitigated supply zone after the tap of this demand zone. So once more, if price reverses before this supply zone, you can easily open a risk entry here and target the next unmitigated supply zone because price did not tap into any supply zone, so demand is still in control. So the third scenario is if price breaks through this supply zone and does not tap into any supply zone, so demand will stay in control, then you can execute a demand trade again on this zone because demand is fully in control because it broke through the last supply zone. So these are the three possible scenarios. So once again, first one, price taps into this supply zone, reverses, then you can't open a risk entry here because you should wait for a confirmation entry because supply is in control. The second one, if price reverses before the supply tap, then you can easily open a risk entry here because demand is in control and price did not tap into any supply zone. And the third one, if price breaks through this supply zone, demand will be fully in control and you can easily open a risk entry on the demand zone. Okay, let's see a live example for this. Okay, so let's see a live example for the risk and confirmation entries. So as you can see, price was moving in an uptrend, creating a series of higher highs and higher lows, higher highs, higher lows. And in an uptrend, price will form demand zones. So we have this really valuable demand zone right here because it created huge inefficient push to the upside. This inefficient push created a break of structure and swept some liquidity from this region and created liquidity here just above the zone. After this, price did a pullback here. And after the pullback, it created a break of structure to the upside again from this demand zone. But actually, I refined this zone on the 5-minute chart because we are currently on the 15-minute chart. But we'll talk about refinements in the next video. Okay, so we have this demand zone that created the last break of structure to the upside. And this break and this demand zone pushed the price up to the supply zone. Because we have this supply zone up here, because price was moving in a downtrend. And now price is in the pullback phase in the uptrend. So it's on the way up to tap the supply zone. So after a supply tap, supply took over control from demand. So you can't open a risk entry on this zone or this zone. You will have to wait for a confirmation entry, some change of character, and after you can open a demand trade also on this zone too. So let's see what happens. Price reacted on this supply zone, as you can see, strong rejection. So supply is in control. If price breaks through this zone, supply will be fully in control because it broke through the last demand zone. So after a zone breaks, an opposite side zone will be created. So if this demand breaks, supply zone will be created. Let's see what happens. Very strong momentum. As you can see, price broke through this demand zone. So a supply zone has been created. And this supply zone this supply zone caused the order flow that led to a break of structure and change of character to the downside, and it broke through the last zone. So we can't open a risk entry here because we have to wait for a confirmation entry. Let's see what happens. Supply is fully in control. So supply is still in control. Let's see what happens. Okay, price stepped into the supply zone, as you can see, and had a reaction and some rejection. So this means demand is in control now. And we have this supply zone up here that caused the tap of this zone with inefficient push, as you can see, and break of structure to the downside. And actually it swapped some liquidity from this region too. So this is a really valuable supply zone. If price steps into this supply zone and rejects on it, supply will be in control again. But if price breaks through this zone, demand will be in control again, and the demand zone will be formed because it broke through an opposite side zone. Okay, let's see what happens. As you can see, price stepped into this zone and had a reaction. So supply is in control now. If price breaks through this zone, demand will be in control and the demand zone will be formed. Okay, price broke through a supply zone. So demand zone has been formed here, as you can see. We have this demand zone right here. Let's just extend the zone and play price forward. So actually you can open a long trade on this zone because this was the confirmation entry. Price broke to the last supply zone. So demand has been formed. So a confirmation entry has been happened, and we can target the next unmitigated supply zone, as I said. So this will be our target point. Let's see what happens. Price tagged us into the trade, had a reaction. So demand is in control, as you can see. Price reacting strongly on this demand zone. So we are in the trade, creating series of higher highs and higher lows, respecting demand zones over and over and over again. I will just extend these zones. Let's see what happens. TP hit. So as you can see, this is how can we use the risk and confirmation entries, knowing the fact who's in control for our advantage. And this is a really, really strong weapon. So you have to master it and master everything about the control side, because you always want to trade the countering side of the market. Okay, meet you in the next video.